Portfolio Builder members, welcome to our Wednesday trailer where we play the SPY ETF. Top news today is Zuckerberg is getting grilled on the Hill about his Libra project, and our teaser about Zuckerberg doing a pro-Trump speech relates to his Georgetown speech last week. And basically, he has jumped ship. All the tech companies have been very democratic, globalist, and that just didn't fit into Facebook's business model. His key competitors are in China. They've ripped off all of Facebook's features. They're growing at rapid pace. They're creating their own cryptocurrency, which is due to release in about 2 months. And Zuckerberg comes out with a pro-First Amendment freedom of speech presentation last week, saying he will not try to use Facebook to control the political discord and ban any political ads. So it's up to the courts to fight any kind of slander or anything of that nature. So this is a huge change and shift for Facebook, and so very interesting. And he clearly was criticizing Twitter and Google primarily for their censorship most recently. But meanwhile, let's take a look at how we generated profits this week. We'll start off by reviewing the most recent trade alert, which was from Monday through Wednesday, trading the SPY. And then we'll see how that lovely TLT delivered some superb profits this week after giving us a little bit of a hiccup the last 2 weeks. So the SPY traded from 297.73 to 299.56 for a 17-cent loss. And that option caller came in and reduced those losses. We took a credit in of 19 cents on Monday and got another credit of a penny to close that out today. So the net profit was 3 cents a share. But as I said, we're up considerably this week, and it's not from the SPY. We did have a nice profit Friday through Monday on the SPY, but this week the TLT is up about $1.80. And we currently have just over a 2-to-1 ratio of the TLT against the SPY. And so what I want to do now is just show you our return on investment growing this week. And so we're going back to the Monday trade. You can see we were down as much as 0.7% in October. Now I know a lot of people will look at that and say, well, that's no big deal. But if you look at our track record, we've only had one losing month. And because this is a program designed to generate consistent income with low volatility and extremely low risk, this is an abnormal loss for us. In fact, October started up 1.1% in the first week, only to fall to negative 0.7. Let's look at our return as we continue to have faith in the strategy and the big picture. So on Monday, we were down 0.7. On Tuesday, we were down 0.3. And today, on Wednesday, we're down 0.2. So will we hit a profit for October by Friday? I sure hope so. Let's take a look at what's going on, and then we'll jump into some of the top news. We do have a paid member webinar today, so I'm going to keep today's video a little shorter. But I do have some interesting things to pull up that are reason to be worried. So we'll take a look at that. Tom, welcome. Ron, welcome. Thanks for saying hello and good morning to us in the live chat. We've got more people joining in live now, so welcome. Make sure to say hi in the chat so we can see who's on there. All right, so let's take a look at what we have in our trailer today. So as you can see, the only time we have had losses were related to predicting a breakdown in the trade talks. If a breakdown in the trade talks were to occur, TLT will go up significantly, and stocks we've seen can crash anywhere from 5 to 10% just on a little tweet. So when we have these critical speeches, or rather meetings, one of which was in the start of July, and the most recent one was at the start of October, it's smart to play it safe. And that's what we've done both times, despite these trade deals eventually breaking down. They came out saying things were lovely, and they're going to make progress. Now, they've been saying this for over 2 years. Nothing has come of it. Now, the carrot on the stick for us donkeys is November 15th. They're trying to get this phase 1 deal through. So we got to play along with the narrative, which we immediately switched gears after the knowledge that they would be at least making positive comments about their negotiations, and we've been able to reverse the course of a little bit of loss in our portfolio from the TLT. So let's just take a look at the trade document, and then I'll jump into the news. So you can see my asset allocation right here. Key macro, trade talks still remain positive. Fed continues, although Mark Rubio is constantly on the news trying to put pressure on the legal structure and to pass laws that not only will protect Hong Kong's democracy, but also to try to restrict capital flow to China. So that is an underlying threat that we need to be aware of in terms of the trade negotiations. Fed continues to loan banks $50 to $80 billion overnight, which has become famous and called repo madness. Now, Jamie Dimon and a bunch of other bankers were grilled by the Senate, I believe it was a few days ago, and I finally had time to listen to it. And he goes over the repo madness in great detail. And it's quite clear now that JP Morgan is certainly one of the banks taking a considerable amount of this overnight lending. And so he basically said that there's so many requirements for their bank to hold capital, to back every loan, every investment, that they simply have no cash they can loan out overnight. And that most of the banks are in this same position. Now, this is at the same time they've come out with record earnings, huge profits this week, so it's quite comical. And so essentially what's happening is the Fed is slowly coming in here, taking off the treasuries off of the balance sheets of these big banks. They're getting a huge profit on these bonds, which they probably could not have sold in the open market without causing a bond collapse. And so you can consider this yet another freebie for the banks. No surprise there. But this $60 billion a month is not enough. They're still taking advantage of this repo madness or this repo market, and it continues to be oversubscribed. And we'll look at some interesting charts on this that shows something is awire with the banks. Now, rate cut is at something like a 95% chance come the end of this month, 25 basis points. So that's good for the TLT. And there's still an expectation of some ballpark number between $300 and $500 billion one-time injection into the Fed's balance sheet. So this will be sorted out to these big banks. They'll get to turn in their treasuries, which they're probably up 20 to 30% on, and then go to cash, which will free up all this liquidity in the system for whatever the next big macro move will be. So it's great for the banks. Of course, every dollar the Fed prints is bad for savers and for your common Joe. Okay, so here's our trade allocation. Oh, and also, so far, earnings have been pretty decent. A few disappointments on companies that are global and doing things related to China. But other than that, most of our domiciled companies that primarily do business in the U.S. are still coming out very strong. Now, they've been doing this game where they lower earnings expectations and then beat it, and the market seems to like that. But the big picture is the Fed is lowering rates, printing money, and there's really nowhere else to invest unless you're going to play this flip the bonds for a capital gain instead of for the consistent income, which is what bonds are supposed to be designed for. So our current recommendation is 100 shares in the SPY, $30,000 to pick that up. Monday, Wednesday, Friday, we trade that at noon Eastern. 200 shares of emerging markets. That is a basket of 1,000 companies that gives you exposure to all the big boys that are not part of the American SPY ETF. So it does diversify your portfolio. My expectation is with a phase one trade deal in November that the SPY can go up around 10% to the 315 to 330 range, and that emerging markets may travel back to the 2017 high, which is about a 20% run up from here. TLT, we have 200 shares, so again, it's a 2-to-1 ratio. We're slightly overweight in equities until something changes that will create a catalyst for downside in equities markets. And then meanwhile, we remain long 250 shares of GDX. That's the gold miners. We like the gold miners as long as the spot price in gold stays elevated. And it's been slowly drifting lower. So I may give us an alert closer to that November 15th to at least buy a put option to protect our GDX shares. With the big picture, we want to own gold. There's no question about that. But in terms of reducing some short-term volatility, it may be worth picking up a little put option around that November 15th date. Now, I'll show you an interesting chart. Germany, for the first time in something like a decade, is now buying gold. We'll look at it. The whole central bank network is massively buying gold right now. Here's a look at our returns per month, and it's here to show you that our goal is to generate a consistent return with very little drawdown, and to kind of show off how well we do in times of volatility. So look at December. That was a huge sell-off. Approximately from the tip to the bottom, a maximum drawdown of about 20%. We made 1%. Now, come January, the plunge protection team came in, rallied markets up from negative 12% relative return to as high as about back to even in February. So you could have made 12% in February if you were had timing secrets and bought at the 24th, the day before Christmas. So our portfolio didn't pick up 12%, but we made 2.2%. February, market went up, we made 1.7%. March, the market really didn't go anywhere, just bobbled up and down. We had a good month, 2.7%. Come April, the market rallied pretty strong, about 4% maximum gain. We only got 1.2% of it. Come May, we had that huge sell-off. That was a 7% sell-off from the peak. Actually, it's almost 7.5% maximum drawdown in May. Our portfolio made 2.2%. Take a look at June. Your maximum return in June on the S&P 500 was something like 7%. We pulled off 3.2%. July, we talk about almost every day. That's when that trade deal was supposedly going to go through. I was positioning us in case it did not. We don't get killed. It came through. The market did rally after that initial announcement that they would be making a trade deal, and not to smother this phase one deal, but it was the same deal back in July that they're now talking about now. Farming goods for a delay in tariffs. We lost 1%, not bad. Now, if the market had bad news about that trade deal, probably we would have had another May-style crash at a minimum. So portfolio could have been up on our end, and people just trying to play a long game in stocks would have another heart attack, which the S&P 500 has been good at doing over the last 2 years. It's pretty much gone nowhere. So if you're a buy and hold investor and you really looked at your returns 12 and 16 months back, you're not really up much, and you've had to hold on to a whole lot of risk. Now in August, guess what? The trade tariff tweet came out. Market plunged. What did we do? We made 1.8%. September, we had a low return, 0.3%. But what did the market do in September? It went up and then went right back down. Now October started off really strong because our TLT position was screaming higher, delivering a 1.1% return in the first 3 days of October. And then we got this miracle phase one trade announcement, at least from Trump. Now, the Chinese are not saying nearly as much positive commentary as the U.S. is, but they are saying positive commentary. So we have to go with the narrative. Right now, the narrative is we're going to have a trade deal, and the markets are buying it. And this week, the TLT is starting to climb back up and generating our profit. So let's take a look at today's trade alert. If you took the Monday trade, first step is you have to buy to close the October 23rd, 2019 301 SPY call, and sell to close your October 23 297 put. So I just want to demonstrate how easy this is to do so that you guys can feel confident in following these trades. So here was the Monday trade. And our trades always look exactly like this, guys. So sell to open the call, buy to open the put. Now let's see how we closed it out. So now we buy to close and then sell to close. So I'm just going to flip back and forth so you guys can see this a couple times. Sell to open the call, buy to open the put. In this case, we had a 19-cent credit. To close that out today, we had to buy to close the call and sell to close the put. And guess what we're going to do today? Very similar trade. Market's a little higher. We're still using a relatively loose collar, which means we profit if the SPY goes up, but we have protection to the downside. Sell to open the October 25th 302 call. We took in a credit of 22 cents. If the SPY miraculously jumps above 302 by Friday, highly unlikely, we stop enjoying profits after it gets above 302. Now, we don't lose anything from it going above 302 in terms of losses, but we do miss out on opportunity. Now, on the other side of the coin, if the SPY were to plunge, something bad comes out, maybe some terrible earnings, maybe Microsoft has its first miss. Doubt it. They had record profits last quarter. We'll see. I believe they come out with earnings this week. Maybe the China trade war breaks down. A lot of things could potentially go wrong. If it did, we don't have to worry about it. We get to walk away with $2.97 a share because we're long a put. Let's take a look at our risk graph. And we can see our maximum return for this period will be $2.29 a share, or $229 a contract. And our maximum risk is $271 a share, or $271 a contract. Now I'm going to pull up these slides and then jump into some topical news. So this is, again, our trade setup for folks who want to follow the full 5 days of trades. Target return is $750 a month per 75K invested. We've averaged more like $1,000 a month with this exact setup. It's a 2-to-1 ratio of the bonds to the SPY, and then we're able to slightly overweight the portfolio in equities with that Tuesday trade. Meanwhile, we still remain long the gold miners because spot gold is elevated, and we're in a general environment where gold should rise. We'll take a look at that in a minute. Now, if you want to have less work and potentially about a 20 to 30% increase in return, as well as volatility, consider this setup. You trade Tuesday and Thursday. It has the same ratio of equities to bonds and gold, but you can get started with only $35,000. Now, remember, if you use Ameritrade, you have free trades plus 2-to-1 buying power. So you could actually get this going with only half that capital. So about $17,500 deposited to your account, set it up for margin. You can start following this and generating consistent income and test this out for yourself. A little bit about our product, and then we'll jump into the topical news today. Our simple 4 ETF portfolio is extremely diversified and all you'll need for retirement. Our goal is income and safety, not growth or speculation. You can simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. Now you might say, well, only 2 stocks, the SPY and emerging markets? Well, it's actually 1,504 companies that are automatically rebalanced for you by these wonderful index products. And you might say, well, what if everybody starts to sell the ETF at the same time? Well, that's why we have our put options below and a huge position in the TLT. For every $300,000 invested, our goal is to generate investors a $3,000 per month profit with very little risk. And if you do decide to join our program, here's what you'll get. A trade alert every Monday through Friday at noon Eastern via email and text. This 1-hour video teaching you how to place the trade and the thinking behind the trade. An optional spreadsheet just like ours to track your results with tutorials on how to use it. The promise to protect your portfolio and pick up the low-hanging fruit for a target return of 1% per month. And we also have an optional 16-week boot camp. So if you're not confident you can follow those trades, which I just showed you are quite easy, consider joining our 16-week boot camp. It turns you into an options trading machine that can print safe profits out of the stock and bond market. All you got to do is show up to a weekly webinar on Tuesday, and I'll get you in shape for trading the options market. So if you haven't joined yet, call Dean. We have a lot of different options. We have a few lifetime deals. We're not going to sell that much longer. We make more money, obviously, if we can get you to pay an annual price for a decade or two as our returns continue to deliver. And that's how we've grown our audience significantly. Think about it. We're not out there selling some crazy sales letter promising the moon. We're not making you buy the product before you see the trades. We're doing the exact opposite. So we've been able to attract a huge group of mostly millionaires who trust our alerts and follow them religiously. So call Dean, 505-322-7515. Let's get you in the program and start seeing results. Here's our disclaimer if you want to give that a read before I pull up the topical content. I'll put this up again at the end of the video. Okay, I'm trying a quicker way to get this up today. Okay, so here's the top content I've pulled together. Today, Zuckerberg is trying to explain his digital currency to the committee, and his big point is China's already doing this. We're going to get behind, and mixed feedback, definitely mixed feedback in terms of that. What was more interesting for me related to Zuckerberg was not just his Libra project, but to see him literally jump ship from the Democratic group and the globalism to joining more of the Republican side, trying to defend freedom of speech and all the censorship that we've seen in platforms like primarily Google and Twitter. This is just a funny tweet. What is the Fed not telling us? I'm asking for a friend. And he pulls up this chart, and you can see the repurchase agreements. And this had been low for a decade, and then something broke. You can see we are now doing more asset purchases than we did during all of 2009 and 2010 when we injected a ton of money into the liquidity system with the repo market. So we're now at $197 billion that's been added to the balance sheet, and nobody really knows why. Fed's not QE POMO was extremely oversubscribed today, so people are still needing liquidity. And while interest rates are tumbling everywhere, credit card rates are going up, so that is definitely concerning. Now, in the real estate market, we're seeing a huge boom in new starts, which is starting to work its way through the system, which I think will be very bullish for U.S. GDP. But we're not seeing it on the consumer rates for credit. Boeing revenue tumbled 20%. I guess that could have been suspected with all the drama they've had. Here's a shot of the World Gold Reserve, which has been skyrocketing in 2019 as the U.S. World Treasury Reserve has been in decline. Primary sellers of these treasuries are Russia and China, and they're loading up on gold and have plans to try to get rid of the dollar as the reserve currency. Now even the Germans are buying gold. This is after 2 decades of selling gold. Here's the repo injection. You can see that $200 billion in there. China's credit impulse. Every time they get into a trouble period, they inject a lot of money into their system. And that's exactly where they're at right now. So I do suspect they will be injecting a lot of credit. And meanwhile, their inflation continues to soar in the agricultural sector, which is really bad when you need to feed 1.4 billion people. You pay them $1,000 a month, and you tax them at a 70% rate. So I'm sure that's going over just swell. Plenty of YouTube videos from Americans who moved over there. They fell in love with China 30 years ago. They watched it grow massively, and things have been deteriorating quickly. They went from cheap food to expensive food. The quality of food is in decline. And they all hate it over there now. They literally went from being China lovers to trying to get their families out of China and really making a big scene out of it on YouTube. Meanwhile, Hong Kong is continuing its unrest, and Beijing draws up a plan to replace Carrie Lam. We can see Nancy Pelosi and most of the government is joining the anti-China bandwagon, which is very interesting, and maybe one of the reasons we're starting to see China finally cave in and buy some agricultural products, despite there not being a signed deal just yet. Hong Kong finally formally withdraws the extradition bill, but now that's not enough. They want all the protesters released. There's a lot of drama revolving around this. What's key to remember is Hong Kong is China's only way to get access to capital. Nobody wants to invest in a secretive communist government directly because that's exactly what it is. You can't see their books. They regard that as part of their state secret. So we rely on Hong Kong, which has better legal system, as an outlet to invest in China and that whole general Asian area. So this was put out over a month ago that they were going to do it. Did not help with the riots whatsoever, and I doubt this will do anything either. A lot of drama with the crypto market lately. There's a good chance China is trying to suppress the value of Bitcoin because they're having massive capital outflows. And there's a lot of data showing that despite them trying to trap all the money possible and keep it in their economy, these people are finding ways out. And don't forget, one of the biggest Bitcoin companies in the world, Bitmain, is headquarters in Beijing, China. They have a monopoly on the Bitcoin mining industry, and their owners are the richest billionaires in the world by far in terms of Bitcoin billionaires. So there could potentially be some pressure to try to keep these prices down to help offset the incentive to try to get your money out of the yuan and into gold, dollar, Bitcoin, real estate. They're just trying to get out and buy everything they can. Here's just a little chart showing you the reserve currency status. America would be devastated if it lost that reserve currency. That's what most of the regulators were worried about with the Libra project. And you can just see these different spans of countries dominating the world, from Portugal, Spain, Netherlands, France, Britain, currently the U.S. Elizabeth Warren had a little talk yesterday and was really pitching hard if you have over $50 million that you need to start paying a 2% tax per year on all assets, kind of like a property tax. And she continues to gain momentum. Very interesting. Stock buybacks are at record levels, 2018, 2019. It's going to be hard to get much of a pullback in stocks if credit's cheap, which we follow the LQD ETF to follow investment grade rates, and it's at record lows. In fact, companies like Microsoft can go overseas and even get money for free with negative interest rates. So quite alarming, and until this trend breaks, it'll be very hard to change the markets. Most likely, we'll keep printing money until we get some inflation, and the Fed has to hike up rates. Probability for a rate cut at this month's FOMC meeting is at 91%. Here's a look at China's GDP. This is why all the central banks are lowering interest rates and printing money. China's slowdown. China's growth has been the engine creating the world growth for the last 2 decades, and now they're slowing down. Now they're still growing at a fast rate, at least according to their numbers, but this slowdown is causing a lot of economic chaos around the world. I follow McConnell just to see if there's any dissent in the Republican Party related to the impeachment. Also, he's married to a lady whose father owns a gigantic shipping company that does business with China. And interesting enough, his wife was taking a photo where you can see a communist leader was trying to secretly chat with her, and they caught her on tape. Who knows what they're talking about, but definitely something to keep a close eye on. McConnell's very upset about the withdrawal of troops from Syria, so I'm keeping a close eye on that in case this impeachment moves forward. Got to have a close read as to whether he still has the support. All right, guys, so that is a wrap of today's content. Let's see if we have any questions. Now, we do have our paid webinar coming up for the paid group in a few minutes. And if you have not joined yet, call Dean 505-322-7515. If you're on the expired list, you're seeing this video delayed and you're getting the trade alert after the market closes. So that's no fun. If you want to get tomorrow's trade, call Dean at 505-322-7515 and we'll get you signed up. All right, guys, thank you so much for your time. We'll be live in about 20 minutes with our paid group just to go over what we're expecting in the markets and how we will react to that with our trade alerts. So thanks again.